Developments in the Nigerian capital market ecosystem came to the fore at the second quarter 2017 Capital Market Committee press briefing by the Securities and Exchange Commission of Nigeria. It was an opportunity for the Director-General, Mr Mounir Gwarzo, to give updates on the key issues discussed at the CMC that will impact the market.
Our desire is to see that we have a complete database of all registered operators. So we provided that template, even though some of the information that I required to be completed are yet to be completed. But we have made significant progress by having a complete database of 421 capital market operators. But our desire is to make sure that every registered capital market operator operating in this country has a complete database so that they ensure that they comply fully with the provision of the law. We also briefed the community on the excellent initiatives we've been pursuing with respect to the e-dividend mandate. You recall we released a circular extending the registration of the e-dividend up to 31st of December 2017. This is an initiative that we started, I think, late 2015. It's been doing quite well, but the progress has not been the way we expected it. But when we launched it, we alluded to the fact that it's a very laborious and lengthy process, because for the first time in the history of this market, investors are going to get the true benefits of their investments by getting their dividend being paid into their account. We also informed the market on the direct cash settlement. You also recall that we briefed you on the direct cash settlement, in which we made it now mandatory for every investor in this market must have to key into the direct cash settlement. The committee has streamlined the process. Now we have one uniform form that people are going to complete. We also briefed on the dual license model. You recall we informed you on some of the interface we're having with CBN, such that an operator would be able to have a license to have access to the discount window of central bank, such that they will be able to benefit from the liquidity that will come out of it. All what we require from CBN is to state what sort of securities that operator needs to put forward. One of the key challenges we're having in the market, particularly within the CMOs, is the access to liquidity. So we've had a very fruitful meeting with the central bank. We commend central bank for their commitment and dedication to this project. But the discussions will continue. But from what we got at the last meeting, central bank seems to be thinking in our directions, but there are a few teething issues that we'll sort out. So now on the financial literacy, we're looking at it from two perspectives. The first perspective is the capital market studies, which will involve the introduction of the studies of capital market, both in primary school and secondary school. And that initiatives will be driven by the capital market community. The other one, the bigger one, is the financial literacy, which all the regulators are involved. And we presented the budget to the members of the CMC, and they have accepted the budget. This government is very keen in diversifying the economy to reduce reliance on oil and to go back to the agri sector. And we think the capital market community has an excellent role to play. We set up a committee to look at the entire ecosystem, the commodity ecosystem. We know a lot of reports have been prepared, but the critical game changer is the implementation of those reports. So a committee has been set up, and they brief the market on the modalities of their work. Hopefully at the next CMC, they'll be able to come up with some of the low-hanging fruits that we think will begin to implement. We also had a meeting with the secretaries of all quoted companies. One, to get their buy-in relation to the issue of dividend warrants. You recall that we had taken a decision that by 31st of December this year, there will be no more issuance of dividend warrants. Now, that initiatives can only be successful if we also have the support and the buy-in of the company secretaries. So we held a meeting with them, and we got their full support. We also discussed on the issue of submission of annual reports. And at that meeting, we had in attendance the leadership of Shareholders Association, because while you have the company secretary, you also have to also invite the Shareholders Association. We had a very robust discussions. Some of the shareholders were insisting on getting their annual report. But our argument is the essence of having an annual report is for the investors to have opportunity to review that document, and by the time you attend an AGM, you'll be able to make an informed decision and ask all the relevant questions. And we know in this country, most of the times, investors get their annual reports even after the AGM. So we agree that as a pilot for the first 1 year, annual reports are going to be sent electronically to all investors. And the company secretaries have assured us that they are going to try their best to get all the email addresses of all the investors. 2, the hard copies of the annual report would be deposited, some copies will be deposited with the Shareholders Associations. SEC will regularize the registration of all shareholders so that we make sure that those are the ones that are registered with us. So number 1, annual report henceforth will be transmitted to shareholders through an electronic means. Then 2, they will keep some good copies with the Shareholders Association so that any shareholder that intends to have a hard copy, that shareholder will be able to have access. On one part, it will reduce the costs on the part of the company so that they can be able to plow back that cost to the company, and they will be able to declare better dividend for their shareholders. On the part of the investor will be able to have access to that annual report, go through the annual report, and be able to ask the relevant questions at the next AGM. We also discuss on multiple accounts. Members, you recall that SEC has come up with a policy of multiple accounts, and we set up a committee that categorizes the status of multiple accounts. One category A, is where you have both shares in your name by using different names, your first name and your last name. Another one, you bought it with the use of your first name, your middle name, and your last name. And probably another one with your first name and your middle name. So you bought it, in 3 different ways, which is also an offense, because that amounts to multiple applications. That gives you an undue advantage over the other person that only bought it once. But because you are probably the same person that bought those shares, the market agreed to give you forbearance from now to the end of December, but with the caveat that that investor must come forward with the relevant KYC. And any KYC now involves your BVN. Once you can justify that you are the same person that has the first name, the middle name, and the last name, you are also the same person that has the first name and the last name and the first name and the middle name, you should be able to claim those investments if you do so before the end of this year. But for those that bought those shares in their names and in completely different names entirely, certainly there's no KYC in this world that can justify you are the same person. For those ones, the shares will be forfeited completely.
Mr. Gwarzo speaks further on the second quarter 2017 CMC meeting and the state of the economy as it affects the capital market.
The CMC meeting was very good, very successful. One, we reported on the progress we've been making with respect to the e-dividend and DCS, the direct cash settlement. The 2 key initiatives are very key to Commission because we believe that it will be able to address almost all the issues we've been having in this market. So we reported on the portal that was launched and the progress we have reached. More importantly, the data from the e-dividend was able to also come up with demographic data regarding investors in Nigeria, showing the gender aspect, showing the age, and showing the distribution. More importantly, it shows that Nigerians from the ages of 20 to 34 are actually not investing in the Nigerian capital market. That the greater part of those people that are investing in the capital market are those from the ages of 35 to 65. What is the lesson? The lesson is we need to come up with certain initiatives that will be targeted towards those kind of investors. So we now discuss with the technology department to look at some of the newly developed technology instruments that would entice some of these young men to now invest in the capital market. So we reported on the e-dividend, we reported on the DCS, we also reported on other issues like the committee we set up on commodity exchange. We think one of the ways that we can contribute to government initiatives, particularly in the area of diversifying, moving from the agricultural sector, moving from the oil sector to the agricultural sector, is for the capital market to also support it. How do we support it? We support it by coming up with certain initiatives that we think would address some of the teething problems within the commodity ecosystem, the grading, the distribution, the channel system, and the price discovery. And we're happy that AFEX, which is the private commodity exchange, has now instituted their trading platforms. And the committee has also been mandated by the Capital Market Committee to come up with key deliverables and timelines for the implementation of some of these initiatives within the commodity ecosystem.
Looking at the Nigerian economy, what is the optics from SEC Nigeria? You just launched a statistical bulletin, which is laudable. Brief us more on that.
Certainly, the data that has been come up from both the Office of Statistics and the and other sectors, particularly Central Bank, clearly shows that the economy is on the path of recovery. Inflation has gone down. Oil price now is above $50. Production we hear is about $1.8 to $2 million. And we're also happy with some of the initiatives from the CBN, particularly the creation of the investors and exporters window, which now mandate all exporters to now deposit their FX into that window. And it will also give opportunity for investors in Nigeria to access that window for their FX. And clearly we can see a significant improvement in the stock market in the last 3 or 4 months. Our hope and prayer is that window will be sustained. We believe that once that window is sustained, investors' confidence would also be enhanced. And the MCI index of emerging markets, that the NSE is still on the observer level. By the time that initiative is sustained, we believe that NSE will now be brought back into the MCI index, and that would also improve the confidence of investors in the, in the whole world. Particularly if you also look at the performance of quoted companies in the last couple of months, their profitability has also gone up. So we believe with the inflation going down, probably in the next 1 or 2 of the MPC meetings, we are likely probably going to see interest rate might come down as well. And that will give companies, manufacturing companies, to also have access to capital. And I think the new initiatives of dollarizing the investment in treasury bills is also going to enhance the supply of FX. By the time the supply is improved, companies will have more access to FX for their importation of machineries and raw materials, and investors that invest in the market, particularly foreign investors, will be able to adequately repatriate their funds. So I think the policies are in the right directions, and we have started seeing positive returns. The capital market clearly shows and defines the state of the economy, and we can clearly see that now that the economy has picked up, is on the trajectory of growth, the capital market is also on that path.
The primary role of SEC Nigeria is the protection of investors and capital markets development. It is expected that the apex regulator will work assiduously to ensure an enabling environment for the market ecosystem and serve as a regulator that is enabling viable initiatives that can deepen and transform the market.